Hi guys, KP this side. Hope all of you are doing good. We are back with another vlog today, and as I told you, the questions which I couldn't answer in my last video, I will try to answer them today. So thanks a lot for your questions, guys. But this time I think questions have been more stock specific, where you want to know whether you should continue holding a stock or whether you should be making fresh investment in a particular stock. So I got less number of conceptual questions, but wherever possible I'll try to give you as many concepts as possible, because just giving you stock specific information, for me that doesn't work great. You have to work on your overall knowledge. If I keep giving you stock suggestions, you will never become independent. Okay, so first question is from Ravindran, who wants to know the prospects for Dmart, which is Avenue Supermarts. If you have heard about this script, this is one of my favorites. A disclaimer right away: we have purchased Dmart in many clients' portfolio. We have recommended it to a lot of our clients. So basically, what happened and what this guy wants to know is, with Reliance JioMart venture coming in, Dmart will be under pressure, and that is exactly what we saw. So for Dmart, there are two things. Number one, during this lockdown, they have not been able to register good sales. Number one, that is the problem. So for obviously for June quarter, you can't expect much from them. Second is, with Reliance focusing now on the retail business, it will be bringing some challenges for companies like Dmart or India Mart. But I personally am very bullish on this stock. Just with a competitor coming in, it is not going to end the game for them. It's not like that. The stock is right now trading, I think, close to 2050-60. I have not written that rate. Its 52-week low is 1405 and its 52-week high is 2560. So stock is somewhere between its 52-week low and high, and it has hit its low on 23rd of March, when it did 1820. Sorry, it did a low of 1405, but on 23rd of March, when most of the stocks have done their 52-week low, when Nifty was close to 7700 mark, this stock was close to 1820, which means you can just get an idea that even when most of the stocks were trading at their 52-week low, this stock was still able to sustain levels of 1820. As far as the book value, price to book value and price to earnings are concerned, they don't look very decent, because company does not have great price to book value and P ratio. P ratio, like if I tell you P ratio is close to 131 times, yeah, that's pretty high. Whereas the industry average P ratio is 66 times. But as I say, it's not so easy that you just have few fundamental parameters based on which you will decide whether to buy or not to buy a share. You have to look at future prospects of a company. As far as future prospects of this company is concerned, it's very strong. The promoter is holding 75%. FII and FII has increased their holding from 6% to 10.42% in last 6 months or so, which gives you a clear indication that FII is doing a lot of buying in this stock. And if I talk about their net profits over last 4 years have grown from 320 crores to 1300 crores. 320 crores, their profits have grown up to 1300 crores, and their revenue has grown up from 8500 crores to 25,000 crores. That is massive. And as far as their business model is concerned, company is very aggressive, and I personally feel this is a very good stock, and you shouldn't be looking at some momentum in short term. This is one stock which you want to keep in your portfolio and just forget about it. Number one. Number two, why I feel positive about this stock is because if I compare it, if I do a peer comparison, as I told you, India Mart is another listed company. You should just have a check at its fundamentals. India Mart was also under pressure when Reliance in its AGM few days back have discussed about their JioMart venture thing, and they clearly showed that more than the petroleum business, now they will be focusing on telecommunication and the retail business. As far as India Mart is concerned, even this stock was under a lot of pressure, went down to close to 2000 price just a couple of weeks back, but Friday it has given a closing of, I think, 2870, and the stock is trading at its 52-week high. So Dmart will also show upside momentum. Once it shows, it is going to go up by 200-300 bucks. That is what I feel. That's for the minimum I am saying. And company is already showing very great signals that in this unlock 3, they are almost going to get back to normalcy in their business. Plus they do aggressive expansions and all. I can make a full video on Dmart. It's one of the best stocks, I feel. Yes, going by its P ratio and price to book value ratio, it does look expensive, but as far as the business model is concerned and future prospects are concerned, and as far as the aggression of promoter is concerned, everything looks pretty good. Okay, I hope I answered you, Ravindran. Next is Elbin, who wants an opinion as to holding large cap banking and NBFCs at this point of time. Okay, Albin, I feel I made a video earlier where I told you shouldn't be taking too much exposure in banking and NBFC stocks. But at the same time, it's not that you shouldn't invest in it. As far as large cap banking stocks are concerned, so my personal favorites are HDFC Bank, ICICI Bank. IndusInd Bank is also a great stock, but if I have to pick up any two, I would go for HDFC Bank and ICICI Bank. At its current valuation, HDFC and ICICI Bank both look stupendously good. HDFC Bank trading close to 1030-35 range, ICICI Bank trading close to 346-347 range. These stocks, literally I can say you can look for an upside of at least 25% in a year or so. They are fundamentally very good, and these are banks which you can rely on. There will not be much of NPA, there will not be much of disclosure irregularities and all those things. They are having very clean balance sheets. Yes, he's also asking me what about the moratorium impact. So we know that two moratoriums have already been given. One was the second one is going on now, which is till August 31. Yes, we do have a crucial decision making by the finance minister, which is going to happen between August 4th and 6th. That is when they will decide if they should continue with the moratorium. But this time, they're not going to take an independent decision. They're going to decide it in collaboration, in association with all the big banks and NBFCs. They will be sitting over there and deciding. Some of the banks like HDFC Limited, if you look at HDFC Limited, the NBFC, they have already told that we should not be giving another moratorium now. Obviously, because what is happening is when they're giving this moratorium, even companies or individuals or retailers who are capable of paying, even they are taking advantage of the moratorium and they're not paying. This is putting some stress on the balance sheet of these banks and NBFCs, because of which a lot of correction has been seen in last couple of days in the banking and NBFC stocks. So all eyes now on between 4th and 6th of August. If they do a moratorium extension, then yes, banking and NBFC stocks will be under pressure. But as far as your question is concerned, you are asking about holding on to them. I personally feel definitely you should continue holding on to them for a longer period of time, at least. As far as banks are concerned, HDFC Limited and ICICI Bank, with a horizon of 1 to 2 years, you can definitely hold. And as far as NBFCs are concerned, my two favorites are HDFC Limited and Bajaj Finance. These two are my picks. Apart from that, yes, there are other like M&M Financial is again another great script. Ujjivan is doing well right now. They have posted very good numbers for their last quarter. But I would still say if you want to go for some of them, because obviously you're not going to buy most of them, you are going to buy maximum two in banking, two in NBFC, or one in banking, one in NBFC. I would prefer ICICI Bank in banking. That's my first and the most favorite pick in banking. And in NBFC, probably I would go for HDFC Limited, because Bajaj Finance has still shown a lot of recovery from 2000 levels to 3400 levels, whereas HDFC Limited, I still feel a lot of momentum is still left. Okay, I hope I answered you. Anil Kumar is asking me, should we do averaging? And if so, what is the right time to do averaging? I think I answered this in my earlier videos, but still I would answer you once again. So Anil, basically what you need to see is, it's not always that we have purchased right stock. So if you buy a stock and you see that stock is coming down, the first thing you got to do is check on the fundamentals of the stock, or see if some news is creating negativity for that particular script. If you feel there is a news out there which is a sensitive material information which can impact the fundamentals of the company, or it can impact the business operations of the company, then probably I don't want to average it out. Maybe I don't want you to exit at stop loss, but you can continue holding on to the same quantity, which means you don't want to increase your exposure. But if you feel the stock is going down, but there is no reason that you can apparently feel why the stock is going down, then yes, we need to do averaging. What I recommend for averaging, so let's say we have a stock which is 100 rupees, purchase price is 100 rupees. Now add 100 rupees. If I see the stock is going more than 20-25% downside, maybe let's say it touches 80 rupees. At 80, maybe I can add another 25 to 50% quantity, which means if you had 50 quantity earlier, with 100 rupees being the original cost, maybe at 80 rupees you can add up another 15 to 20 shares, and like that if it further falls then you can add up another 15 to 20 shares. Like that averaging can be done, but as I said, averaging should be done only when you are very confident that there are no changes in the fundamentals of the company and there is no such news, whether it's economy related or industry related or sector related, that is going to directly impact the business of the company. If there is news which is adverse for the company, probably I would suggest that you continue holding with the same quantity, same exposure, and don't increase it. But at the same time, if you are confident about the fundamentals, I don't recommend panic selling. You should continue holding on to your stocks. Sagar is asking me, what are the stocks with good long-term prospects? Okay, I think I already told them. For me, if I have to go with stocks which are well recognized in the industry, with Nifty being above 11,000 mark, and I still see good value in these stocks where I still feel there is good upside left, my picks will be M&M Finance. M&M Finance is now available at a good price after it has become X-Right. They brought a right issue at a very cheap price of 50 rupees. Now it is available close to 130 odd levels. I think you can definitely buy it for long-term perspective and keep it. So next will be Intraday, Bharti Infratel, which is available close to 190 rupees. I again feel this is one of the cheap stocks. The reason why Infratel prices are going down is because they are looking forward for a deal which is getting delayed. Because of that, HDFC Bank, ICICI Bank, like I already told you, and apart from that, Bharti Airtel. These are stocks which I prefer. It's not that these are the only stocks I prefer, but these are the ones which come to my mind first when I think about stocks from long-term perspective and still having very good fundamentals. I personally love them. Okay, I hope I answered you, Sagar. Next is Harsh. Harsh is asking me, what about CESC? Okay, I personally feel CESC is, I hope you know about it, Calcutta Electric Supply Corporation. It's a company based in Kolkata. So CESC, I have again a disclaimer, we have made a lot of clients buy it. In fact, we have done the targets multiple times for this particular script in no time, but this time we got it around 600 rupees and we are stuck with it because now it is trading close to 549. Yes, so it's not that we keep boasting about ourselves. We don't believe in that. We don't like falsifying about things. There are a lot of stocks which I buy for my clients and we don't see targets coming in 5 to 10 days. If I know that magic and every time that happens, then probably I won't be doing advisory. I will do all investments for myself, right? So it's not that everything has to perform within a time that you define for the stock. What needs to be seen is you need to examine the stock closely if its fundamentals are still intact. If it takes a little bit time, you should not have that pinch or tickle in your stomach that why is it not performing. You should only focus on the fundamentals of the company. So if I made my clients buy CESC at 600, 610 levels, it is available at 550 levels now. Do I feel this is a good stock? The kind of holding that Harsh has sent me, I very much doubt if he is my client, because most of the stocks he's talking about here, we recommend those stocks. So I don't know if Harsh is my client or not, but he's asking me about CESC. Harsh, I feel CESC is one of the best stocks available at a very good price right now. Okay, so right now 549 is the price. It has a super EPS of 98 rupees. It has a book value of 732. So stock is available with a price to book value ratio less than 1. So there's no reason why you won't buy a stock like this. The kind of business model they have, electricity is something which is needed on a daily basis. It has no business, there's no ups and downs, or there is no business cycle kind of a thing, right? Its P ratio is 5.6 times, whereas the industry average P ratio is 9.8 times. So even from PE ratio perspective, we feel that the stock is very much well priced at this point of time. Can we make a fresh buy into this stock? Definitely you can do that. Definitely it can be done. So next stock he's talking about is Power Mech. Power Mech again is one stock we have recommended. We feel the fundamentals are very good. Again, we did the target for the first time in Power Mech. We again tried to re-enter the stock with some correction, but the stock has come down by some 30-40 rupees, which is actually more than 10% of downside. But I've told my clients to be patient about it and hold on to the stock because I don't see any reason why this stock cannot perform. Company is involved in power sector and infrastructure business. EPS is, okay, the stock is trading at 421 guys. Low price is 306 and upside the price is 959, which means stock is available at a discount of close to 60% right now. You can understand how good is that. EPS is 90, book value is 652 guys. Book value is 652. Just look at it. FII and DII are holding close to 25% in this company. Okay, and its P ratio is 4.7 times, whereas the industry average P ratio is close to 10.21 times. So I don't see any reason why we shouldn't continue holding on to this stock. exactly, if we see lower levels, maybe around 400, 405, we might average it out. I would be suggesting my clients to average it out. For anybody who is planning a fresh buy in CESC or Power Mech, this is a great time you can do it. Third stock is Maharashtra Seamless. Again, I feel Maharashtra Seamless, with this time the results have not been great. But if again you look at the fundamentals of the company, it is very good. We made the clients buy it in the range of 220 odd levels. Right now available at 196. N number of times in the past we have done the targets for Maharashtra Seamless. This time we are struck with 20 rupees of correction in this stock from the rate at which we bought it. Yes, so definitely I feel this guy is my client because he's probably struck with these three stocks, and that is why he wants me to talk about it. But as I said, I'm very, very comfortable with these three stocks because all of them have super fundamentals, and there is no reason why they will not show upside in coming times. Which also gives you a very clear indication, guys, is that don't look at index and decide whether it's right time to enter the markets or not. That's such a bullshit and stupid theory. I just don't understand why people don't get this point that Sensex and Nifty are reflections of just 50 or 30 stocks. Like in case of Nifty it is 50 stocks, and in case of Sensex it is just 30 stocks. Based on that, index will change. And when you see stocks like Reliance, TCS and Bajaj stocks, these stocks have done so much of upside in last couple of months. Definitely index will reflect a very high value. That does not mean there is not much potential left in stocks which are not part of the index. Some of the examples I've already given you, stocks like ICICI Bank, HDFC Limited, HDFC Bank, Power Mech, Maharashtra Seamless, CESC. There's so many stocks out there which can be purchased. So please don't tell me this, that I feel once index will come below 11,000, then I will start doing buying. Which means you're just trying to say if Reliance comes down, I will start buying other scripts. That's what you're saying. That's as stupid as it sounds. So Maharashtra Seamless is available at 196, done a 52-week high of 448. Book value is 478. You can understand its price to book value is not even 0.5. So you can understand the stock looks very, very good at its current price. Okay. Next is from Vipul. Vipul is asking, can options trading be done just based on the fundamentals? Okay, so you need to understand, at least in my case, what I do is I would still prefer to do options with stocks where I am clear about the fundamentals of the company, because it is based on the fundamentals of the company that I will decide whether stock is trading cheap or it is trading expensive. And if for me the stock is trading cheap, I would probably go for buying a call. If for me the stock is trading rich or expensive, I would prefer to buy a put for the stock. But that is not what will define whether you can make profits from options or not. As I said in my last video also, with options, when you're buying options, the biggest challenge is that you're fighting against time. The movement should happen, but then the movement in the stock should happen within very small span of time. So maybe you are bullish on, let's say, Ultratech Cement, but if that upside does not come within a reasonable amount of time, then you still may not make money from the call option. If you think Titan will go down, Titan may go down, but it may take a lot of time to go down. Then still, if you have taken a put option of Titan, you will still not be able to make money from it. So what you need to understand is, yes, fundamentals are very important, but there has to be some reason why you feel that particular script can show a lot of momentum, whether upside or downside. If you are expecting upside momentum, you will buy a call or you will sell a put. If you're expecting downside momentum, you will buy a put or you will sell a call, right? So, but the thing is, it's not just fundamentals. Yes, for a person like me, I don't believe going only by charts. I don't believe in that. So for me, fundamentals are very important. Even if I'm doing options, I will prefer to do it for those kind of stocks where I have decent knowledge about the stock, and at the same time I am expecting that some news or some event is going to happen which will cause some volatility in this stock. That is the kind of stocks I personally prefer to do options with. Okay, Vipul, I hope I answered you. Second question you are asking is, what about Trident? Trident is available close to 6 rupees. If I look at their audited PL and balance sheet, I don't see any reasons why this stock is available so cheap. They did a profit of, I think, 343 crores in the last year, which is a huge profit. So yes, Vipul, we can take a position in Trident because downside is very less. You can lose 6 rupees. It can't go below that. And on the upside, we can expect any value to come for this stock. I don't do a complete tracking of it now, but as far as I saw the stock in its books, nothing seems to be wrong with the company. So you can definitely consider it. Next is a question from Rishi. He's asking me, should we trade in cryptocurrencies? Rishi, two things. Number one, honestly speaking, I don't have much knowledge about it. I mean, when Bitcoins have become talk of the town, I did a lot of reading about it, which is like close to 3 years back, 2.5, 3 years back. But today, what I personally suggest is, with so many asset classes available in the market, with so many beautiful, safe asset classes, legal asset classes available in the market, I don't want to try my luck with something which is not even properly talked about, or people don't even have complete knowledge about it. And there are a lot of notifications and circulars coming from RBI in the past where they have told that trading in cryptocurrencies is not legal in India. And at the same time, if tomorrow something goes wrong with it, like I once heard that cryptocurrencies have been stolen. So it's a digital currency which is intangible in nature, and still if it can be stolen, you can understand the amount of risk you are running. And second is, today when you buy something, you buy real estate property, you have RERA regulations, you buy equity shares, you have SEBI regulations, you buy bonds, you again have RBI or authorities looking into it. So you buy any other asset class, you have regulators who are going to give you protection. So there is consumer protection. But as far as cryptocurrency is concerned, number one, we lack knowledge about it. Number two, we don't understand what exactly are the factors which cause price fluctuations. Number three, there is no government or regulators who are going to give you backup in case of something going wrong for you. So why do you want to try your luck with something like cryptocurrency? If you really like gambling, go to casino, man. Why do you want to do it? Now online casinos are also available. Why do you want to do cryptocurrency? So I'm not personally in favor of it till the time I get 100% clarity about it. Okay, I hope I answered you. Parth is asking me, what about the future of Raymond company? Raymond, as we all know, is a company which is mainly into textile business. Company is right now trading at the range of 239. It has done a low of 210. Upside is 829. So stock is available at a very, very discounted value. We did a lot of buying for our clients in the range of 260, 265. And yes, again, we are losing on some 20-25 rupees over here. But does that change anything about the company? Answer is no. Then why is the stock under pressure? Probably the reason for that is because for last couple of quarters, they have not done great numbers. That is the reason stock is under pressure. But overall, if you ask me, the fundamentals of the company are stupendous, and you can expect this value to revive anytime soon. This can potentially be looked upon as a value investing. Yes, in the past, they had some management and management issues, but now I think things are sorted out and company should be back on track in no time. Trading at a price to book value of 0.65, stock looks tremendously cheap and having an EPS of close to 30 rupees. I don't see anything going wrong with the company. It's a good buy. If you already have it, maybe you can average it now, or you can continue holding the same quantity. Next is Ashik. Ashik is asking me, how do you buy stocks based on P ratio? First, Ashik, the thing you need to understand is PE ratio is one of the parameters which can be used for evaluating the stock, but it is not the only factor based on which you can buy these stocks. Now you need to understand P ratio. So first of all, I'll give you a small definition about P ratio. P ratio, suppose, is 10 times for a stock. What does that mean? It means for every 1 rupee of earning that stock is generating, you need to pay 10 rupees for it. So for every 1 rupee of earning, if you're paying 10 rupees, as far as the market price of the stock is concerned, we say that a P ratio is 10 times. Now you need to understand, what do you prefer as an investor? Do you prefer a low P ratio or a high P ratio? It is very subjective, because you need to understand a stock will have a high PE ratio only when its fundamentals are better. So let me give you one example. If I have to choose between Infosys and Wipro, and Infosys has a P ratio of 20 times, let's assume. Wipro has a P ratio of 15 times. So first of all, I want to know why Infosys has a higher P ratio. Is it the fundamentals of the company which makes it expensive? Because more P ratio means you are paying more for every 1 rupee of earning. So when I do the analysis and I find Wipro has some debt in its book, just for numbers, hypothetically we are assuming Wipro has some debt, whereas Infosys has no debt in its book. Number one. Number two, Wipro is anticipating future growth rate of 8%, whereas Infosys is anticipating a growth rate of 15%. So when I look at these numbers, I clearly see Infosys is a zero debt company. Their future projections about the growth is more in net profits or revenue. So obviously their fundamentals are better. Now if a company has better fundamentals, it has all the rights to be trading expensive. Obviously in such cases, a high P ratio stocks can still be preferred. I hope you understand my point. So basically, if fundamentals of the company are good, you don't mind paying a higher price for that share, and in that case high P ratio can be justified. But overall, if you are not doing comparison of stocks, and if you look at just the industry average P ratio and the stock P ratio, if I feel fundamentals of the company are good and the stock is still trading at a P ratio lower than the industry average, I would personally love to buy such stocks. That is what I think answers your question. Okay, Pavan is asking what about Zee Entertainment? Zee Entertainment is trading at 138, guys. Low is 114. On the upside, the stock has done 392. Again, the stock looks very cheap at its current price. The FII is holding close to 67% in this company, guys. Two reasons why stock has gone down in value. Number one is Yes Bank has filed a case against the company because they have given a loan guarantee for an amount of approximately $50 million, and they are saying that they have failed their loan guarantee or something they have said. Now the hearing for this is going to happen, and that will be a deciding factor for how Zee Entertainment will stand in coming days. And second is the quarter fourth net loss was close to 766 crores. These are the two reasons why the stock has shown so much of downside pressure that it is almost trading close to its 52-week low. But overall, if you ask me, I think company is decent. You can definitely consider investing in it. If you already have it, you can continue to hold it. Okay, for people who are planning to do fresh buying, I personally prefer that for the time being you can avoid it till the time we don't get clarity on its Yes Bank issue which is going on. It's better to stay away from the stock and enter into it only once we get some confirmation from the court. Next is Akshay asking me about the future of PVR. PVR is one stock which has shown an upside of close to 2100. Downside is 705. Right now it's trading close to 1084. In recent past, they have introduced a right issue. Although the proportion of right issue was not very favorable, but they brought a right issue. So stock was trading close to 900 odd bucks, after which it has shown an upside of close to 250 rupees. It even did 1200 a couple of days back when we got to know that during this unlock 3 they are contemplating opening of cinema halls with a lot of restrictions in that. So would I be buying it right now? Answer is no. I give you three reasons for that. Number one, it is a high debt company. They are sitting on a debt of 13.7 billion in total, which is a very high debt. Number two, they have a very high PE ratio. They have just EPS of just 4.7 rupees with a PE ratio of close to 230 times. I don't personally prefer that. Number three, the reason why I don't want to buy this stock at this point of time is because of the circumstances that we are surrounded by. Even if cinema halls are opened up, I think it will be very courageous on our part to go and watch cinemas in the theaters with centralized air conditioners being on, and recent updates on coronavirus suggesting that it is airborne also in some cases. You don't want to take chances to go and watch a movie in the theater at this point of time. It will be as good as Khatron Ke Khiladi participation. So we don't want to do that. That is one reason, and second is this OTT platform gaining more and more popularity and acceptability by audience. That is one reason why for PVR probably things will not be so easy in next 6 months time. So if you have this stock and you bought it at a right time, maybe around 800-900 bucks, I personally suggest that you should book your profits and exit the stock for the time being. And if you are planning to do fresh buy, absolutely a no, given the reasons I have shared with you. Ankit is asking me, what do you suggest about intraday trading? I hate intraday trading, Ankit. I don't personally like it. I don't know why people want to do it. So you understand it like this. Intraday trading, are you doing it part-time? Which means your main source of income is something else. Maybe you're doing a job or you have a practice or something, you're doing your own business. So you want to do intraday trading as a part-time? If yes, then understand one thing. If you're doing intraday trading and you really want to survive that model of investing in equity or speculating in equity, it needs a lot of time. So much time that probably you might get distracted from your main source of income. So in those circumstances, obviously you don't want to concentrate on your income from other sources, which can probably disrupt your main business. You don't want to do that. If you're looking at intraday trading as your main source of income, that is, you want to make a career in intraday trading, then I personally feel, based on my experience or what I've seen in the past, people who are just dependent on equity investments or equity trading for their livelihood and they want to do just intraday trading, I personally feel it will be a very, very difficult task, because you need to understand one thing, guys. When I do fundamental analysis, okay, so I am a hardcore advocate of fundamental analysis. I use technical analysis very rarely, and that too only to see if the stock can show some momentum, especially when I'm doing option trading, or maybe if I'm giving you some momentum bearing stocks in the equity delivery base. But I personally do not believe in much in the technical analysis. For me, fundamental analysis is more of a thing which you need to do. It requires a lot of labor, it requires a lot of efforts, but I still feel that is better because I'm accountable to my clients, so I need to buy correct things for them. Okay, so talking about intraday trading, you are basically not just challenging, you're not just anticipating the movement in the stock, which can be upside or downside. You're also talking about the movement to come within 9:15 to 3:30. How on earth can you do that? How on earth? How on earth anybody can do that? So anybody who is promising you that they know how to do intraday trading, we have launched an intraday trading products in InvestorWise. We have, whoever has come to us for that, we have told them very clearly, we will look for trades where we see a lot of momentum in a day, but if it does not happen in a day, you got to hold on to your stocks. So what I'm trying to make you understand is, it is very, very, very difficult to anticipate what is going up tomorrow or what is going down tomorrow. It is very difficult until and unless you have some reliable sources from which you're getting insider information. It is very difficult. So why do I, and it is very draining out also. You won't be able to survive this market for more than 2-3 years. You, after 3 years, you will be fed up of your work. The kind of amount of pressure you will have, playing on margins, having those restrictive time limits within which the share should do well or it should go down, you doing short selling, it becomes very difficult to survive in that kind of a market. So it's any day better that you do your fundamental analysis, you do your homework properly, and you wait for the right time. You give the stock a right time, give it some time to perform. Short-term trading can be done, but intraday trading, probably I don't see a lot of future prospects in that. Yes, I know a lot of people will disagree with me on this because market is probably made 80% of punters or speculators or traders, and it's only 20% who know how to invest. So don't call yourself an equity investor if your idea in this market is just to stay for a day or two with the stock, and then you start having that tickling effect in your stomach that why is my stock not performing. First of all, understand one thing: equity as an asset class is misunderstood by 90% people. That is the reason why people are not able to make money in this market. You have set your own definitions based on your convenient set of principles. We are not even allowing shares to perform. You don't invest in shares, you invest in business models. You need to understand that. If you understand the business model, then you buy the shares of the company and give it time to do justice. Give it time to show you the upside. When you define certain things that it should do within a day or within 2 days or in T+5 days or within 15 days, the stock should perform, it is very difficult. It is very difficult to justify this asset class to you. Okay, Deepak is asking why I don't do bank Nifty options. I don't do it, Deepak, for simple reasons. I feel my understanding about stocks is better. As I already answered in the beginning of the video, I personally have better knowledge about stocks. So on those stocks itself, I try to figure out if there is any momentum expected, upside, downside. Based on that, I do it. Bank Nifty, again, when I look at Bank Nifty, I don't exactly remember, but probably it's made up of 8 or 9 shares. In that case, you are basically predicting a movement in those 8 or 9 shares at the same time. So for me, it is any day easier to tell if ICICI Bank is expected to go up rather than telling if 8 stocks are expected to go up or down. I know any one stock in those 8 stocks, if the things go against me, or if any one stock on a particular day gets some good news, it might move the entire Bank Nifty. Number one. Number two, it's very volatile, which is like difficult for me to tackle. So I don't do it. For people who do it, what is my suggestion? My suggestion is very simple. Even if you do Bank Nifty, that's great. The only problem I feel is because the lot size is too small, people tend to get carried away and they start taking exposure in 20, 30, 40 contracts. Once they make a couple of trades good, no, they start taking lots of 20, 30, 40. That is where you start inviting trouble for yourself, because till the time things are going in your favor, it's all good. Once it goes against you, it probably might wipe out your entire capital and put you out of the market. So keeping that in mind, you have to decide. Neeraj is asking me, what about Sun TV? Sun TV available at 387. I think you can definitely go for it with a target of 425 in mind. HPCL again is a buy. HPCL is available at 215, has done an upside of 329. I think you can definitely consider buying it. Akash and Tamanna had similar question. They both are asking me how about technical analysis. I personally prefer doing fundamental analysis. Technical analysis is more of a psychological game. Fundamental analysis is more of a logical game. Let me give you one simple understanding. Fundamental analysis probably looks at the future prospects of the company. Technical analysis looks at the past price patterns. Now suppose, let's take this analogy and probably you will understand what I'm trying to say. A student comes to me who has cleared CA Inter, okay, CA IPC, the student has cleared, and the student now wants to do CA final preparations. This student comes to me and tells me, sir, I am planning for CA final now. My attempt is in November 2020. What do you feel, sir? How many attempts probably I'm going to take? Now that's a very difficult question to answer. How many attempts a student will take? How can I decide? But okay, I'll do some cross questioning from the student. Question number 1: what was your score in class 10? Question number 2: what was your score in class 12? How did you do in your graduation? Question number 3. Question number 4: how many attempts you took for CPT? That is the foundation level of CA. Question number 5: how many attempts did you take in IPC? If I consider these 5 questions and based on that I try to predict what student is capable of doing in CA final, that is technical analysis. You see how a student's performance has been in the past. Based on that you are trying to understand the pattern of future. That's technical analysis. What is fundamental analysis? When a student tells me, sir, what do you think, how many attempts I will take? And if I ask questions like this: how many subject classes are you planning to take? What are subjects you are going to do by yourself? The subject which you are going to do by yourself, what books are you going to refer for that? How many hours of study you are going to do every day? How many rounds of revision you are going to do? How many mock papers are you going to write? If I consider these factors and based on that I try to anticipate if a student will pass in first attempt or not, that is fundamental analysis. I am looking at the future prospects. I am looking at the fundamentals which can have an impact on the performance. So when I look at factors like what is the earning prospects of the company, what are the surplus available with the company, how much debt company has, how much interest they're supposed to pay in future, what are the expansion plans of the company, what new products company is going to bring in its line of operation. If I consider all these things, it means I'm doing fundamental analysis. I'm looking at logical view about share performance. Instead of just looking at the past support and resistance to decide if this is the right time to enter this stock. Okay, first of all, no hard feelings, guys. If you do technical analysis, I fold my hands to you and say it's a great work you guys are doing. But for me, it does not work somehow. I don't believe in it, because if it's all the price patterns of the past which are going to define the future of the company, then why from 2016 to 2020 Reliance has done probably 4 times the value? Which chart was telling you that Reliance will show 4 times the value? Or is it the business model of the company which was so bloody promising that the share has done 4 times the value in 4 years? Think about it. Who could have looked at TCS charts a couple of weeks back and told that TCS will break 2300 levels in no time? They did a good result. They gave a good guidance for their future. Are these fundamental factors or these are technical factors? Which candle gave you the understanding that TCS is going to post good results this time? It will go past 2300 levels because Tech Mahindra has also done good results, Infosys has also done good results, overall IT sector has done good results. There are some good policies introduced based on which we feel US will be more lenient about H1B visa requirements. Are these technical factors which defines a stock will break out 2300 levels? Think about it. So I'm not saying a no to technical analysis, but for me it is 80% is fundamental analysis, probably 20% is technical analysis. Can I only look at technical charts and still make money? Definitely yes. But can I make money every time, or can I predict every time? What is the support range for the stock? What is the resistance range for the stock? Fibonacci charts are very good. They help me understand every time what is the upside or downside expected in a stock. If that is how it is, everybody will start looking at charts and start making money from markets here. Think about it. There is no easy money making strategies in the market. You got to understand that. You need to do proper evaluation of the business models of the company. One bad news comes for a sector. When this news came that second moratorium is going to be given, which chart has given us an understanding that from that point banks and NBFC stocks will fall by 5 to 7%. Charts were not disclosing that. So markets are news based, event driven, future plans of the company, their fundamentals, a lot of things are there. Technicals can give you a side support, which gives you, okay, I have decided to buy this share. Let me now look at charts. If charts are supporting this movement, which I am anticipating, to that extent is okay.
Using charts, opening a laptop in front of you and just putting some softwares and trying to do some number crunching based on that, this is a good level at which you can do a buying. This is a good level. 90% are technical analysts in Indian equity markets. At least for Indian equity markets, I know 90% are technical analysts. क्योंकि उसमें काम ही बहुत आसान है सर, आपको मेहनत ही नहीं करना है. Now when I am talking about CESC, Power, Mech, Raymond or any other stock that we bought for the clients, I can give you all the fundamentals which we considered before giving a buy recommendation. And what did I say? Did I say on charts it looks good that next week it will show an upside? No. I said fundamentals are good. In long term, stocks will do good. That long term need not be 5 years. We also do lots of targets in 5-7 days. But we still go by the business models. We still go by the fundamentals of the company. And yes, we use technical indicators only to understand the momentum in this stock. But using only technical indicators to decide if you can buy a particular stock or not without knowing any damn thing about the company, probably for me it does not work. For people for whom it works, it's good, guys. For you, for me it does not work. But so I hope I answered you guys, and I hope the video has been useful. We'll keep doing these sessions in future also. And till we meet again, bye bye, God bless. Thank you. Stay bullish. Bye.